Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talk about? Well, we have some more follow-up on the methodology in action as we normally do. We have a new mystery charts reveal and we have a new mystery chart in and of itself. I want to talk a little bit about profit centers. Profit center is an ancillary way to make money, and the way I look at it is I'm here all day anyway. Some of you guys have the luxury of being in front of the screen, and some of this stuff you could actually do in early trading, and I'll flesh that out in just a few minutes. It is a little bit more involved, but you can pick up a little extra money here and there. I want to follow up on the 230 EMA system, which I introduced last week. Actually, I introduced it about 30 years ago, but that's another story altogether. And I want to show the good and the bad with it, but right now it's the fantastic with it in crypto, and that'll make more sense in just a few minutes. Housekeeping, I do take requests. It makes my job a lot easier, so I don't have to figure out what I'm going to cover. Tell me what you want me to cover, and I'll be happy to do it. If you need to reach me, davelandry.com/contact to tell me what you want me to cover. And if I can't fit it into this venue, which has a limited sort of format, I can work it into my weekend charts, which is every Thursday night, or most Thursday nights. And you can register for that at davelandry.com/webinar. Register even if the link is old. You can also participate live. As you know, these Trading Simplified shows, thanks to COVID, aren't live as of late, or in quite some time, I should say. But I'm still live with the weekend charts, and you can come and ask questions live if you like, or even better, submit them ahead of time, and I can put some slides together for you. davelandry.com/StockCharts. If you go there, you'll get the slides, speaking of slides, from this presentation and every other presentation I've ever done for Trading Simplified, which includes a lot of the rules, money management, some psychology, some neurology, and a bunch of other stuff. If you can't sleep at night, or just make sure you don't operate heavy machinery afterwards. But if you need to check those out, davelandry.com/StockCharts. Also, I'll send you all three of my books in PDF format, a mini market timing course, and some other goodies. Keep you busy for a long time. Get to know me first. Okay, this is still a mystery chart. I call it a new mystery chart. I guess it's the same as it ever was. Nice uptrend in here from lows. This is a newer issue. It's pulled back a little bit. So far, it has not triggered. 1575 is a trigger. Stop is down here, and initial profit target is up here. Remember, at the initial profit target, we take half of the profits off, and at that point in time, we immediately move the stop up to break even. That way we have the potential for a home run, and worst case scenario, barring overnight gaps, we scratch out on the remainder of the trade. Kind of playing with the house's money, or free rolling, so to speak. All right, I want to talk about trading slightly more complex. And these are things which I call profit centers, and using discretion and a few other techniques in here that are slightly more advanced. Remember, CENX was a prior mystery chart. It was in a really nice uptrend, had a nice deep pullback. Our entry was here. And by the way, if you want to see these trades without the benefits of hindsight, because I do the recording and the next day we look to enter these trades or exit, whatever the case may be, you can go to davelandry.com/archives, and that way you can see my thinking sort of ahead of time. Obviously, the setups have already been triggered, but these are for my trading service, and I would say 99.9% of all the mystery charts come straight from the trading service. Anyway, entry was here, and you could see it rallied up nicely, but unfortunately started to come back in. The stop was down here. Initial profit target was up there, and you can see for 2 days, it got really close to that initial profit target. Now, it's hard to make things sometimes work 100% mechanically when it comes to trading. I thought for sure it could make it to $30 a share, but it got really close and then backed off, and it's getting whacked today, unfortunately. Now, truth be told, I did not take those initial profits at the profit target. It was rallying. It looks like it was going to just blow right through that profit target. So I didn't worry about it, and I was busy chasing other rabbits. And then, of course, stock comes right back in. Sometimes you let your guard down a little bit, and the market, unfortunately, can be brutal. So you don't always want to follow everything 1,000% mechanically. Sometimes you want to be able to use a little discretion. And that's provided, of course, you have the discipline to do so. What I tell people quite often is, yeah, take my stuff, follow it mechanically till you get the reps in, till you feel good about it, till you wrap your head around the methodology, until you see the good, the bad, and the ugly. So anyway, initial profit target came really, really, really close. Didn't quite get there. Don't split hairs when this occurs. So near miss is what we're talking about here. Profit target again of $30 a share. It got to 29 and change, just a few cents away, and then unfortunately came right back in. All right. In the last episode, I talked a little bit about profit centers. This is something I've talked quite a bit about, and you can find these presentations on my website and on my YouTube channel. And a profit center is an ancillary way to make money. And one thing we talked about last week was Russian dolls. And basically what we're doing there is we have a daily setup, something that you would trade for a position trade, because you have the major trend behind you, and then you've got to pull back, and so you've got a really great potential for a reversion to the mean type of move, a pop back in the direction of the trend, and you're just going in for a few hours and hopefully a little bit longer during the day. And you can also get a head start sometimes on longer term positions through doing that. Anyway, it's basically a fractal pattern. Go ahead and see that presentation from last week. Well, opening gap reversals would be another one of these profit centers. So here we have MOS. Came in this morning, and this thing was in a really, really great long-term trend. It has a really bad gap on the open. And if we take a look at the intraday chart, you can see here's a trade down here. Now, in this particular case, I only did 100 shares. This was on a smaller account. And sometimes with me, it's kind of a discipline thing. Yeah, I would love to have gone in and trade this in multiple accounts and maybe put on a bigger share size even in this account. But the SHTF was kind of happening this morning. I was getting whacked on some other positions. I was actually doing some damage control, which is very similar to the opening gap reversal type of trade. You get a stock gaps against you. You look to figure out a way to work your way out of it without getting completely annihilated. But anyway, same sort of type of thinking goes into that. But this one here, I took on as a new position. And again, there was so much going on, I was only able to squeeze off 100 shares. And by the time I did that, with everything else going on, it was too late to get into it in other accounts. But I do like to sort of get the reps in, so to speak. And I don't want to say trade these mechanically, but kind of automatically do them when the opportunity presents themselves. And before I knew it, I'd put this trade on. I was so busy doing everything else, I'd actually forgotten that it was on. But I did have a trailing stop in place, as I'll show you. So anyway, the entry was here. And then I decided it was going to take about 2 points on the trailing stop. Now, this is an automated trailing stop that I put in. And you can see it stopped in right about there. Stopped out, I should say, right around there. Now, when I was up about 3 points in this, I decided, okay, I want to take profits. But you know what? Let me just see if I could squeeze a little bit more out of it. I think it was up about 2 points at this time. Correction on that. And so I put in a trailing stop, much tighter, like a half a point. Then I let it widen out a little bit, but I did get stopped out right around there. So we did the math on this. Entry at 61.24, exit at 64.125. So that's a 2.88 move. Only 50 shares on, but it's better than poking the eye, right? It's 144 bucks. And then on the remainder, stopped out for a gain of 182. And again, only 50 shares, but it's 91 bucks. And again, better than poking the eye. You add that up, it's $235. And as I said earlier, a lot of times I like to take these across multiple accounts and bigger accounts too, ideally. But let's just say I just took this one trade. If I could do one little trade at a couple $100 a day, I know it's fuzzy math, but you add all that up at $235 a day at a roughly 252 trading days, that's $59K a year. And this is on top of the core methodology, the longer term trend following, and that's where the money is in that longer term trend following. But anyway, I like to show you these little techniques. Sometimes you can go in and make a little money on an intraday basis. Now, tread lightly and kind of ease into these if you haven't done them before. And it's kind of just the opposite of what I like from my core methodology. I sort of like a little bit thinner issues, and unless it's something that's poised to make an inefficient move like a energy stock that's bottomed out for a long time. Looks like it's ready to take off, like the CPE trade we had last year, which was up about 600% at one point, and I think we stopped out about 500% gain. So sometimes those very efficient stocks can make inefficient moves. But anyway, I'm looking for just the opposite in a lot of cases of what I'm looking for with the core methodology. So I want to see a nice thick issue. And if memory serves, I think the average volume on that MOS was like 11 million shares. So that's a lot of volume. And you basically, with these ogres, you need a lot of players. So let's say the market gaps sharply against everyone, and well, everyone's not a whole lot of people. Let's say it's a thin issue. Well, the people that could possibly buy it aren't going to be there because they already got knocked out. There's just not enough players in the market. Now, these players might be institutions who missed the boat. Now, let's say some stocks really rallying like that one was, and they don't have any on their books, and they need to make sure they can sort of window dress, so to speak, to show their clients that, hey, look, we actually bought that hot stock too. Now, the same might hold true for individual traders. And another thing that can happen, and this is kind of along the lines of the theory behind, or the principle behind the trend knockout, is that maybe they get knocked out and then they emotionally want to get right back in to the stock. Also, you could have a market maker and he has to buy the stock from those who are willing to unload it. So what they'll do is they will lower the price as low as possible, knowing that they can flip it out later in the day. Now, a lot of times between the covering and all these other things that are happening, the market can begin to sometimes go straight back up, especially if the shorts really begin to get squeezed. Now, you want to make sure the stock is set up and has strong momentum and recently hit new highs and then formed a pullback or a TKO or some sort of pattern like that. Again, see older shows for that type of stuff. Now, one thing I would caution you against is don't trade burning dogs. And I stole that term from Linda Rasky. If you read her book, Trading Sardines, which I recommend you do, she talked about a gentleman in her office that would sometimes just buy these gaps at new lows, and there was no real rhyme or reason to it, and it's a very dangerous thing to do. So we are trading with the trend. Now, shifting gears, I want to continue my discussion in crypto. And when crypto takes off, as you likely know, it can really, really take off. And by the way, it's not about the crypto. And last fall, when crypto was hot, and I was really, really into it and talking a lot about it, a lot of people like, well, I don't trade crypto. It's like, well, it's not about the crypto. It's about identifying market inefficiencies, markets that are moving where everything isn't priced in, and trying to figure out a way to get on board. And a simple little system like a 230 EMA, like we talked about last week in last week's Week in Charts, where you're looking for 2 bars of Landry light above the 30 EMA. In this case, it's the 20 EMA. This is from an article I did about 20-something years ago, as I said earlier. Anyway, you then look to get in above the high. Now, I have 10 ticks in here. This was for Japanese yen, as I think I said last week. So you might give it a little bit more wiggle room depending on what market you're in. And on downside, same thing, 2 bars of Landry light, and you look to enter below the lowest low of those 2 bars. Now, let's hop out and look at some live examples of this, and I'll remind you of a few caveats too. Now, before we do that, I guess we should talk about the caveats. Don't rush out and trade this system or any other system right away. Do use it to help you to gauge possibly developing trends. And as I talked quite a bit in last week's Dave Landry's The Week in Charts, trend following systems can have abysmal results until you hit it out of the park. So trend following counts on you capturing a really, really good trend. Now, this will keep you out of some, but obviously not all chop. If it kept you out of all chop, it would be a holy grail type of system. And the bottom line is a trend following system can work beautifully when markets are inefficient. Inefficient means everything isn't priced in. Like right now, crypto is on the move again. So something like this, as you'll soon see when we get the live charts, can actually print money. But don't think it's the holy grail, and just be really, really careful when you decide to go out and trade this. Also, I can't emphasize this enough. Make sure you're using proper money management as opposed to following everything 100% mechanically. So if we hop out to ACP, it's easy to see there if you use the Landry light indicator, which by the way is free. All you have to do is like this video and then this little plugin down here. You'll see this. Click on that and load my indicators, my plugin. It's absolutely free. And maybe one day I might charge for that, but for now, we'll just leave it free. So let's take a look at this simple little system. And we're only looking for 2 bars of Landry light. Bar 1 right there, and you can see the low is greater than the moving average, so you have 1 green bar down here, okay? Remember, this just counts the number of bars that the lows are greater than the moving average. Bar 2 is right here. You enter above the 2 bar high, so the entry would have been right around here, plus a little wiggle room. Now, let's go through a few of these, and I think you'll begin to see that it works really great when, and when being the key word, you're in an inefficient market. Now, I'm actually long this one here, but let me show you the system based on this. So look down here, you have 1 bar of Landry light. You kind of have to squint your eyes to see it. That's what's great about this little indicator down here. And right here would be 2. So this is 1, 2. So you enter above this high, plus a little wiggle room. So mechanically, you would have entered here, but if you give it a little wiggle room, you probably would have got in right around here. Now, the system basically says, look to exit if you come back to the 30 EMA. Now, I wouldn't give up all of this move all the way down, so you'd want to be taking partial profit somewhere in here and have that stop maybe at break even, especially on a wide range bar like that. Now, let's take a look at a few more of these. So here's ADA. I'm also along this one too. You're going to probably think this guy has never found a pair that he doesn't like. But lately, crypto has been taking off again. So bar 1, bar 2, and again, you can see it down here, okay? Look to get long above this 2 bar high. Now, in a case like this, you're stretched quite a ways away from the moving average. So somewhere up here, triggers here, and so far, it hasn't set the world on fire, but it's done okay. By the way, on the short side, you're looking for the same thing, but 1, 2 bars, and you're looking to enter below that 2 bar low. So you would enter it either here or with a little wiggle room, maybe around here or so. And it did touch the moving average, but instead of trading it mechanically, like enter there, and then, okay, I'm just going to hang on and let it drop and drop and drop and drop and drop and drop and let it come all the way back to that moving average, what I'd recommend you do is use some money management and maybe be at break even after taking some partial profits, just like we do when we're trading stocks. Now let's take a look at a couple of more of these in here. So Algo is another one, and believe it or not, I'm long this one too. So let's take a look at the Landry light. So you have to squint a little bit, but if you look down here, we have 2 bars of Landry light, enter above the 2 bar high, plus a little wiggle room. Okay, so maybe about right here. And you can see it really hasn't taken off just yet, but it is beginning to work its way higher, and you are beginning to get a little bit of Landry light building. Also back here, let's see, bar 1, bar 2, the entry would have been below this low, so maybe trigger in here, or a little bit more wiggle room again would have triggered in here. And again, nice little slide lower. Now let's go through these and see if we can find some pairs that are slightly more liquid and continue to look for the pattern. But as you go through these, you can see quite a few of them have set up with the 220 EMA breakout system. Now here's one that I'm long, shocker. And you can see, let's go ahead and get the, so here we go. Bar 1, bar 2, and again 2 bars down here, 2 bars of green. Enter above that 2 bar high, okay? So entry would have probably been right around in here, okay? Let's keep moving on this. Okay, I'm not long this one. So But I do want to show you that bar 1 is here, bar 2 is here, or look down here to see 2 bars, okay? Simply lows greater than the moving average. Look to enter above that 2 bar high. Either there or with a little wiggle room, maybe you would have gotten in a little bit later, right around here. But so far, so good. Again, based on this. Now, I don't want you to think this is the Holy Grail. This right now, crypto right now, is a very inefficient market. It's moving again, okay? It had died out for a while. The good news is when it died out for a while, as you look at a lot of these, you could see that they actually trended lower nicely too. So inefficiency works both to the upside and the downside. So if we were trading the system back here, bar 1, bar 2, right here, you'd have been short somewhere in here. Nice, nice, nice slide lower. Okay, let's take a look at more recent times. If you squint your eyes, that's bar 1. I know, probably not exactly what I intended originally. You want nice, clean Landry light, but technically that is 1 bar above, 2 bar above, enter above this high. So you would actually be long that based on this system. And I think this is probably a good starting point when you're looking to maybe develop a system or something, or understand trend following in general. Crypto.com, I think I have some longer term positions that I've accumulated here, just some crumbs left over for some other positions. If you go to my YouTube channel, for a while what I was doing was I was doing some mining, so to speak, where I would save off a little bit after a swing trade. But anyway, it depends on how you want to count the first bar, but this is 1 according to the Landry light down here, bar 2, so entry would have been in here. And so far, a little bit of a nice move higher on that one. CRV, this was one I was looking at earlier today. In fact, something that I might want to think about. Bar 1, bar 2, so the entry would have been right in here, okay? Now, again, I'm not saying trade it mechanically, but if it comes back to this EMA, in this particular case, you probably would want to stop out of that. And as I alluded to earlier, sometimes it can keep you out of some chop. So this looked like a breakdown, but it wasn't. The system didn't trigger. This looked like a breakout, but it wasn't. And the system didn't trigger, okay? So let's take a look at Ethereum. Bar 1, bar 2. Enter above this high, plus a little wiggle room, okay? So your entry would have been here. And so far, it's made a pretty nice run higher. I do have a position in Ethereum too. Now, keep in mind, I do look to take partial profits in these and trail a stop higher. Okay, so FIL, you can see this would be bar 1. Now, this is bar 2 here, so the entry would be above here. That's stretched pretty far away. So if you did take this trade, nothing wrong with buying things that are a little extended, but just make sure you're willing to stop out should they come right back in. And again, I don't think I would ride it all the way back down to that EMA. In other words, I wouldn't trade it exactly mechanically. So let's back up to Doge, because I know that one triggered a while back. By the way, I don't think I've ever made a dime in Dogecoin. So maybe I've got a little mental block against it, but bar 1, bar 2, again, come down here, you've got 2 bars of Landry light, okay? And then the entry would have been above this high, plus a little wiggle room, so you'd be long from right around here if my pin will work. There it goes right there, somewhere in there. Okay, here's another one I'm long. Shocking, right? But you can see bar 1, bar 2, technically somewhere in here would have been the entry, maybe a little wiggle room. So this would have been a little bit more of a plausible entry. And so far, so good on that one. Now, again, I can't emphasize money management enough. Also, we're in a great market right now. If things start chopping around again, look at all this trading back here, just chopping back and forth, back and forth, back and forth, back and forth, back and forth. That's not a fantastic market. But when you see, if you sort by the strongest pairs and you see tons and tons and tons of green up here. In fact, this is something I've talked about before. Sometimes you can just buy the strongest pairs when you're in an inefficient market and things are just kind of going right up. I'm long this one. I am not long scale, but you can see that's one that's going up. Rune, I am long, believe it or not. Because why? Well, it's going up, okay? And you can go back in time, obviously, and see bar 1, bar 2, trigger bin right there. So I think you've got a feel for it. And again, it doesn't always work this great, but keep this in the back of your mind for now that crypto is in this nice trend and going up again. And in the future, when you come across inefficient markets that are moving really well, sometimes something as simple as this can get you in to some really nice trends. Well, that's my time for this week. I want to thank everybody for watching as usual. If you need some follow-up information, once again, DaveLandry.com/StockCharts. If you need to get in touch with me, DaveLandry.com/contact. So thanks again for watching, and may the trend be with you.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.